The VA home loan is a wonderful program, but there are a few times when it's not the best option. So in this video, I want to outline what are some good reasons not to get a VA home loan. Actually, there are a few reasons, and as a mortgage loan officer, I have a lot of different programs that I can offer. And so there are some times when the VA home loan is not the best option. So let's go through those. First one is if you're buying a rental property. And that is because you have to live in the property as a primary resident to get a VA home loan. There are ways around it. You can buy a fourplex and live in one and rent out the other three. But typically, if it's just a standard rental property, you cannot do that on VA. Next one is if you are putting down a lot of money. Now, this is a little bit of a tight scenario because on the VA home loan, you can't put down a lot of money. You're not required to go zero down. But on the VA home loan, there is what's called a one-time fee called a VA funding fee. And if you're not exempt, that would be due even if you're making a large down payment. By large, I mean 20% or more. Now, on conventional, it has mortgage insurance if you're doing less than 20% down. But if you're doing more than 20%, there is not mortgage insurance. So in the 20% or more category, there are times, and I say there are times, not always, where it actually makes more sense to go conventional and get that mortgage insurance waiver. It's very, very close because VA has lower rates typically than conventional. So it's a matter of, is it better to have the lower rate on VA and have that funding fee? Or is it better just to go conventional and not have that mortgage insurance, even though the rate's higher? And that's one of those scenarios where I would actually advise you on which one's the better option. The next one is an unmarried couple, and only one of the borrowers is a veteran. That would be what's called a VA joint loan. And in those kind of scenarios, there would be a down payment of 12.5% plus the funding fee, puts you a little bit over 14% down. And sometimes you just don't have the 14% down. And so in those kind of scenarios, it might be that FHA or conventional is the way to go, because that way you can do 3 to 3.5% down. Next one is major renovation projects. Now, if there is a major renovation project where there's no structure, where there's structural stuff needed, typically you can't go VA renovation. And in that case, we have to go 2 or 3K or home style for that renovation project. And then you can't go VA. Next one is